Nifty above 21,000 with lots of gaps in between. So what's next? Let's analyze. Before we analyze, I get this question quite often, and this time we have a few gaps in Nifty, and so the question is coupled with gaps. So let's first understand what is a gap. So gap is when the high of the previous day close, or the high is a closing price, or even the high price of the previous day is much lower than the open or the low of the next day, and that happens, which means it's a gap up. Similarly, we have a gap down, so the low of the previous day or the close of the previous day, and then the preceding day the open is much lower than that, then there is a gap down. So these are called gaps. Now generally people tend to believe that once there is a gap in a Nifty or in an index, then those gaps are to be filled, and that's why this question comes more often once there are many gaps in between. So first let's analyze the three major types of gaps. The first is a runaway gap. So in a runaway gap, what happens is there is an upswing, then there is a gap up, and the upswing continues. So what happens is that gaps help the upswing to even accelerate further. Then we have second one, which is an exhaustion gap. So exhaustion gap, in an exhaustion gap, what happens is the upswing is there is a gap up, but that couldn't sustain, and in a day or two the gap is filled and the stock price starts to fall, or the index price starts to fall. These are quite normal kind of a thing. And then there are third type of a gap, which is a normal gap. In an upswing there is a gap, and that doesn't lead to a accelerated upswing, and it doesn't lead to an exhaustion, and so that's a normal gap. It has been closely seen that the runaway gaps are not filled. Exhaustion gaps is of course filled in a day or two only, and then the third type of a gap, normal gap, in many cases technically the normal gaps are filled, but in a time frame of 2-3 months. Like a gap is being filled after 3 years or 5 years is not considered as a gap being filled. Now the question is about Nifty above 21,000 or close to 21,500. I mean, in absolute terms it's at all-time high, but we have to look at two metrics: price to earnings ratio for Nifty and price to book ratio for Nifty. The price to earning ratio is 21.5 because there has been a good earning season in the last 2 quarters. The earnings is good, and so 21.5 P ratio for Nifty is not very overvaluation. Similarly, price to book for Nifty is at 3.5, and 3.5 price to book is also not very expensive for Nifty considering the historical value of Nifty price to book. So I don't see too much of an overvaluation, but that doesn't mean a 5-10% correction in Nifty cannot happen at any given point of time. I mean, there has been a stupendous run for Nifty, and the Fed cut has pumped in a lot of money into the Indian market, and we can expect the Nifty to run away as well. But that run away still we haven't seen, and even if whatever we have seen, it's not making it into an overvaluation zone. Yes, that means that 5-10% correction would be a great entry point, but right now I don't see any bubble or any kind of overvaluation in Nifty itself. Small and mid cap index, we can see certain pockets of overvaluation, or even a FOMO is very even if we call it as a FOMO, fear of missing out, I can clearly see that in especially the small cap and mid cap segment. But for Nifty, I don't see it as yet.